As we move past the election here, we have heard all of these various political scenarios talked about. What do you think the market is pricing in right now in terms of what Congress will look like, what it can get done, and what are investors perhaps getting wrong right now?
I think you have to go back and look at what the market had priced in before the election. And before the election, the market had priced in a removal of the Trump tax cut, a hike in the cap gains rate, increased drug regulation, and a massive stimulus. And this was not the election that was advertised. And I look at Congress is likely to be pretty evenly divided. So that takes all of the above off the table with the possible exception of a massive stimulus. And originally my thinking was that after the election, there'd probably be some kind of skinny bill. I think because of the Georgia runoffs and the importance of those elections, there's going to be a lot of money, a lot of resources spent on both sides of the political aisle for that state to try to swing the Senate. And in that context, I think Republicans are likely to go along with a larger stimulus.
David, when you hear talk now starting to surface about a potential 4 to 6 week national lockdown under an incoming President Joe Biden, where do you think stocks go in that scenario?
3,000-4,000 points lower, at least. The markets wouldn't like that. I don't think the markets are pricing that in at all. This is not new from the Democratic side of the aisle. Even Neil Kashkari, Fed governor, a noted Democrat, has come out. He said that months ago, and it caused a ripple in the markets. I'm hoping that doesn't happen because it looks like America is starting to get the message that just practicing the very safe guidelines laid out by the CDC go a long way. Even I've complained on this show that inside this building here that a lot of people under 30 were refusing to wear masks. That isn't the case anymore. Now everybody's doing that. And I think if we practice those precepts, that we can open in a measured pace, but a complete shutdown of the economy, I think that's a huge mistake.
David, let's assume that does happen. Where do investors hide out? Because when they hear a potential 3,000 point drop in the market, they get a little worried, and rightfully so. Where can they hide out if we do get that type of volatility?
A lot of money will go to cash. They'll continue to hide out in the stay-at-home trade, but that can only take you so far. And then the question is, what happens when you reopen again? And from what I've seen is that states that have done that, they've shut down, the viral count goes down, the viral caseload goes down, hospitals ease up, and then once you open again, it slowly trickles out again. I think the fact that we have a vaccine, there's going to be a lot of pressure to not let that happen. You've got one company with a vaccine with a 90% efficacy rate. I think the focus should be on manufacturing that vaccine and getting it out to those most at risk.
Well, David, you mentioned the vaccine. I mean, let's be clear. We are looking at record case counts here in the U.S. There's no sense that anyone is really doing anything to contain the virus, but the market cares about the vaccine. So I guess I would ask, do you expect at any point the market would start to look away from that and focus again on the on-the-ground facts? Because for some time now, the market has really been discounting rises in cases. And I think looking past any comments we hear from Osterholm, Kashkari, or anybody else.
I'd have to take the other side of that. Price is truth. Look at where the markets are trading right now. We broke out to all-time highs just recently. The Russell 2000 has been the best performer in the last 6 months. So yeah, there's a potential that would happen, but I don't think the market believes it'll happen. Otherwise, stocks wouldn't be trading where they are.
So how are you positioned, I guess, David, given all that we're talking about?
I think a lot of us got caught off sides on Monday. I found myself that it was a pretty uncomfortable day. I thought I was positioned pretty much dead center in the middle between growth and value, and clearly I wasn't because I had a bad day on Monday. I think you need a sense of balance. I think you need to look at your portfolio and understand that growth is the most expensive when there isn't any. The fact that we're going to have a vaccine means that other sectors of the economy are going to start to wake up. And it makes perfect sense for investors to move down the valuation curve. It doesn't mean the growth trade is dead. It just means it's being repriced and there's other places you can invest. You've got competition right now. And the Fed has literally taken away an asset class. They've murdered the fixed income market. The balanced portfolio, the 60-40 portfolio, is of no help. that's why everybody's crowded into stocks, because it's still the better asset class.